Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it a couple of minutes past midday, 1100 UTC. Really big shout out to everybody joining the stream live today, as well as all of you that watch this on recording. We get thousands and thousands of you, lots of amazing messages, and it's just really, really good. And I always feel blessed to be on these shows with you all. So a really, really big shout out to all of you. Now, this is our chart and alt request Wednesday, meaning that if you do have some instruments you would like me to take a look at, you can pop them in the chat and we'll get through as many as we can in the day. We've obviously had a few classics already. Obviously, we want to cover Bitcoin and Ethereum. We're going to take a look at Solana as well. We had a request for AVAX. We had a request for Axon DAO. That one seems to be getting quite a lot of attention lately as well. One that I personally am a holder of as well. We'll look through that in a little bit as well. I might even touch upon Estate X as well, because that was going quite nicely. So if you do have anything you want me to take a look at, please do let me know. I'm going to just start in a second by taking a look at the news, and then we're going to come back to this. But Shay, Horace, 2PGG, Poopy Pigeon, brilliant name. Let's go. I love the Lego looking pigeon. I used to be obsessed with Lego when I was a kid. Horace, hey, went 100K. Or hey, went 200K, right? I think you got to send me a picture, Horace, when you get that put on a T-shirt. By the way, and 2P, great to hear from you, my friend. Lovely to be here with you all, guys. All right, we've got a few more people starting to join in, but let's not mess around. Let's get our heads into the charts. Okay, let's have a look. Let's make some of these. Let's put that through there. What do we got here? Sorry for two. Shay, you've earned it, mate. You can have two. So we will look at Solana. Pepe, huh? Interesting. Back on the old meme front. Injective as well. Yeah, sure. That had a really, really hot run, didn't it, Horace? So we will take a look at those as well. But just, I'm going to fly through this pretty quickly, but please be aware of the news this week. It's an unbelievably volatile news week. Craigie boy, how are you doing, mate? Good to see you here. Really, really volatile news week. All right. So just taking a look at this, I'm going to run you through it very, very quickly. Obviously, we are Wednesday, 30th of July today. Our focus is always on the US market, biggest market in the world, biggest economy, and they are the world's reserve currency. So the impact that effects on their economy has is normally felt worldwide, or globally would be a better way to frame it. So Wednesday, look at all this news today, right? And we're focused on the red folders here. This means it's high impact news, right? Now with the US market focus, 1:15 today, so in about an hour and 10 minutes from now, we've got ADP non-farm employment change. This is the employment change in the market, not including the farming industry, all right? We can see what the effect of this was last time. It was down 33,000. Yeah, previously. They're forecasting this to be up 77K. Seems a bit ambitious, but they probably know a lot of stuff that we don't. And then we're looking here, advanced GDP quarter on quarter. This is big. Previous was minus 0.5%. They are projecting 2.4% at the moment, right? So we can see the difference between the last print and this print, and we can see that in there. So typically a lot of this data is flushed through early, and the market is an incredibly efficient vehicle at pricing this stuff in. But obviously, any major moves above or below that projection can have an effect. We also have advanced GDP price index quarter on quarter as well, but real focus here is on the GDP quarter on quarter. Slightly later in the day, we then go into pending home sales, right? Now, previous was 1.8%. This is a big downgrade to 0.3%, right? And this is looking at the idea of the interest rates still being a little bit high. It's still a lot more difficult for the average person to get financing. Property prices very expensive. Wages are massively misaligned in terms of growth compared to cost. So the consumer or the average person is feeling that, and that really is or really could face an issue, because it's showing a massive slowdown. Or projected to show a slowdown. Again, we want to be looking at that. If that wasn't enough for you, we then move into arguably one of the most high impact events that we could be looking at, which is the setting of the federal funds rate. We then have the FOMC statement, and we have the FOMC press conference. All right. Now, Polymarkets has the fact that rates are going to remain at 4.5%. yeah, at 96% priced in. So the chances that we move from that are very, very minimal, right? So, when that comes out, it could be a little bit of a nothing burger event, right? The markets ultimately price this in. If the rates were to be cut, I think we would see a mass explosion in risk assets. The S&P 500, the NASDAQ, obviously all of the independent Magnificent Seven stocks, bits like that, but certainly within cryptocurrency as well. And then if that is held and the market doesn't really react too much, then it's all about the statement. Powell's tone. Is he hawkish? Is he dovish, right? If he's hawkish, it's akin to being bearish. If he's dovish, it's akin to being bullish. So you need to really watch these things and look and read between the lines, because that's what the market will be doing to adjust. If he starts saying quite hawkish things like, maybe if we get a bad GDP print today, right? Maybe that kind of pugs, and he says, well, we need to really take that data on board now. Maybe we won't be able to cut for the rest of the year like we projected. That could have a really negative impact on things like cryptocurrency and risk assets. However, if the data comes through really, really well, and he kind of says, you know what, actually, economy's looking really strong, blah, 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 and gives reasons as to why they would want to cut rates, then we could see the opposite. Things could really, really kind of improve. So overall, just be careful today. For me, it's an absolute no trade zone. Obviously, looking at it from an intraday perspective, but if I'm then looking at it on a longer term or a swing perspective, we have things like Ethereum, Bitcoin, etc., all at resistance. I think it just pays to be a little bit careful. All right. Moving through into Thursday, because I'm not going to be live with you guys now until next Monday, so please be aware of this. USA on Thursday, we've got core PCE price index, employment cost index, unemployment claims, massive, right? So like we saw with the ADP non-farm employment change, we saw that miss massively, but actually this was not far amiss. It was a little bit higher than they expected, but a lot closer. Moving through into Friday, it doesn't let up on us at all as we head into the weekend. Average hourly earnings month on month, non-farm employment change, unemployment rate, ISM manufacturing PMI. All right, so you've got this minefield of a week from a news perspective. Just look at it. This is just filtered down to high impact and medium to high impact news events as well. Now, Just a Dad, hello, mate. My tea drinking brother. How are you doing? Thank you for the sentiment and wishing everybody well. So, Craig, will the Japan interest rate decision move the market? So, Japan, we see that as a very risk-off currency. In fact, quite a good gauge in the markets, which I'll show you in a minute. Right, actually, I'll show you now. Can be to look at risk-on versus risk-off currency pairs, right? So, two that I pay quite close attention to. Is the Aussie and New Zealand dollar versus the yen. Yeah, typically the yen being a safe haven currency, Aussie and New Zealand being high yielding currencies. What we're looking at here is kind of looking at the crossover for that to say, okay, what does this picture paint for the day so far? The dollar's pretty stable and the VIX is down. That's pretty good for risk assets, actually. We want to see the volatility index down. But we also see our risk on currency pairs are low today as well, yeah, showing that maybe there is a little bit of pushback. Equities are relatively muted with the S&P 500 down a little bit lower than the NASDAQ, but ultimately still all up on the day. So we can see how it's painting this kind of neutral picture. We don't see this sharp commitment one side or the other. But to go back to your point on that, Craig, right, with the Japan statement, they are almost certainly, and this is going out on a limb here, going to be basing this decision around what the US do, because there's still no finalization on tariffs. They can't really plan out and beyond this. I would be quite surprised to see that rate change in this decision. If they do, I'm not sure it will have a mass impact, obviously, unless you're trading currency pairs. Where it can be quite prominent is that there's something in traditional markets, FX traders, which is known as the carry trade, which is where you're kind of, you're using a low yielding currency like the yen to purchase the opposing pair, which is a high yielding currency, and you're kind of then playing out the difference. You're making your money on the carry trade there. That's been a little bit difficult at the moment, but where that starts to unwind quite heavily is if they put rates up, right? So you could see that lead to a cascade effect that can hit the markets. But I still think it's probably pretty on for a pause here until they can digest the US data that's coming out, unless the US surprise everyone and do cut or do put rates up, which I think is incredibly unlikely. But if they do, then ultimately Japan might choose to be reactive to that. But I think it's a little bit more around policy and tariffs at the moment as well. Lucy Reno, good morning from Madeira. Hello, my friend. Welcome back. Wonderful little place. Friend of mine's just come back from there, said it was one of the most lovely places he's ever visited. And it sounds very appealing because you have that beautiful climate there, right, where it never gets crazy hot, but very rarely gets kind of crazy cold. And I was looking into the island recently. I watched this amazing travel program about it, and it just looks like a little slice of heaven. So I really do hope you're enjoying life there. It's somewhere I really must get out to. Right, so let's get ourselves into the charts because we've got a lot of assets to cover today. Now, look, let's get on with Bitcoin. Where are we? What's going down in Groovetown? Well, quite simply, let me just zoom out to a weekly here. Weekly is still fine. I'm not going to spend too much more on this, but ultimately, while we're bullish and price is obviously bullish, market structure's bullish, we're respecting consolidations, breaking out of those areas, setting and confirming these as order blocks or areas of demand, and price is pushing up. If we're respecting these levels and we're respecting our gaps, in this case, our bullish gaps, which we can see here are our green boxes. Yeah, this one's grey. They're typically grey on my chart, but I do make them green on here just so it's a little bit easier for new viewers who maybe aren't so familiar with my analysis. While we're reacting at these positively and while we're closing and respecting above the black candles here, which are my bearish or down closed candles, then I'm expecting price to push higher. So ultimately, I'm looking for price to use this as a springboard, which we did. We took this out on the low, reacted at the gap, we pushed up, closed a nice bullish pin bar candle here with a short nose. So for me, I'm looking higher now. I'm looking at the all-time high, which on OKX here is 123,293.3. Lots of threes in there. And that's why I look to move up. Am I long here? Absolutely not. And I'll show you why. So this is from our show on Monday. Really, really clear set of instructions. We are just consolidating here, right? In fact, if we do this, actually, let's just turn these off. We did this the other day as well. Here's the expansion, the first consolidation. If we look at it from a volume perspective, look how well this range is just holding price. Yeah. What do we keep doing? Engaging the highs, sweeping the lows, highs, lows. Why does price do this? Look at auction market theory, stuff like that. Price is always in an auction. It's just all about whether it's considered value at that price. That's why price moves in the way that it does, right? So you get these consolidations, like we had a large one here, price kind of fluctuating up, people seeing it as too expensive down here, too cheap here, too expensive here, too cheap here, until you ultimately break out of these areas. And then price establishes itself at a new level, right? And then we need to understand, is this accumulation and price is looking to move higher, or distribution? In which case price will almost always head back to the last point it was considered fair value, all right? Now, we've just got a consolidation here at the moment. Look, we don't have any confirmed breakouts. And if we did, see this one, this is a really nice breakout candle or potential breakout candle. Yeah, really strong close above this level. Now, remember, if you're using something like volume profile, you didn't have all that data then, you only had this. But look how it's still the same. That's containing all the lows. Look at all the wicks. This is containing all the highs, all right? This was a strong breakout candle, so we now look for price to establish itself above here and move higher. Ultimately, it didn't. It closed back inside the range, in which case our range trading principles tell us that we then trade to the far side of the range. So ultimately, if we look at this on a daily scale, we are just held in this range. Now, the last thing that we've done here is run the range low. So if we're looking at that from the perspective of what we just discussed, then this high, or the high of the range from a volume perspective, is at 119.495, is definitely a target. But we also have this here, all right, which is the high. I'm typically looking to trade these into highs and lows as well of prior days, 4-hour candles, etc., because they're very, very often key liquidity targets, all right? So what I'm going to do is I'm going to pop these bits back on now, and I am going to get rid of the volume profile and just explain again why these things are on here. So I'm always trying to set myself conditions. It allows me to be more disciplined. So I say to myself, I'm willing to be long from the big green box, yeah, because that's our weekly gap, yeah, a fair value gap, meaning that when price moves up here, we create these gaps from a failure of order pairing, which means the market often likes to revisit these areas, rebalance them. It allows buyers to step in if the trend is strong, and ultimately price then moves on searching for buyers at a higher price. Always think of an auction. If you get into an auction, the auctioneer steps in. If price starts really low down here, And they go, okay, 114,000 for one Bitcoin. Who'll give me 114? I'll give you 114 for one Bitcoin. Okay, no problem. Who give me 114.5? I'll give you 114.5. Who'll give me 115? I'll give you 115. And price is just moving up. Now, think if an auction starts too high, yeah? And too high would be, let's say, this example here. Okay, who will bid me 121? Anybody for 121? Room is freaking silent. Okay, no problem. Will anyone give me 120? 120.5. Anybody at 120.5? No one at 120.5. What about 119? Nobody at 119. Then people start stepping in here at 116, but it's not quite enough to follow it through. So price finds cheaper prices. Ultimately, that's how you end up in a range. So we want to set conditions for that. And my intraday conditions for this with Bitcoin is short the range high and long the range low until it breaks. If you followed those same principles, you would have 1, 2, 3, 4, a handful of really, really good bias days that would allow you to build capital. Right. That aside, what else do we want to play? Well, I'm not really massively interested in shorting this unless it's on an intraday basis because we have all this stacked support. I really feel like we could come back down and retest the prior all-time high. Right, that's the one that we set at the beginning of the year here in January, but then ultimately the all-time high here as well, which when we set it, which was, funny enough, actually on my birthday, we then came back through and we didn't break that again until July, right? So when we see this breakout here, I think this area could get retested, but at the same time, I don't know if price is going to find buyers here. I don't know if it's going to find buyers here. I'd much rather wait for price to come down to either this low or these areas and then look for long setups rather than try and guess in here if price is going to break out. Ultimately, if it is going to break out, this is what I want to see. I want to see a strong full body candle breakout above here, and then this bluey grey box, which is clearly resistance, white resistance, 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 resistance again. I want to see that dominated. I want to see a big candle cut through that like it doesn't even care that it's there. And then I either want to see this level, which is the all-time high, or this box here retested. So either that, yeah, or this would be ideal because we would then be flipping this into support as well. But I would expect a deeper correction down to here. And I look for longs here. What happens if I'm wrong? What happens if I get stopped out and the world ends? Of course, the world doesn't end when you get stopped out, right? The market gives you new information. You need to approach, what's this methodology? Bayesian, I think, methodology, which is where you're constantly adapting and including new data into your setups. So if everybody's looking for this breakout, I'm looking for it. You know, the world and his dog are looking for this breakout right now to get long on Bitcoin. Well, this could be a trap. If it is a trap and I get stopped out, well, no problem. The price closes back in the range like this. Well, then I've got my intraday hat back on and I'm shorting this back down to the range lows, at least here or probably this low, right? And that's how I'll look to maneuver. As new information comes in, you can't be afraid to process that information. Don't get married to your bias and say, well, I'm only taking long sales because we've broken out. You will be the person, right, that ends up longing here, no problem, with no risk management. And by the time you think you're wrong, you are deeply in the hole or liquidated somewhere down here. Just don't be that person. Take little nibbles at the market, for Christ's sake. Just give yourself the opportunity to stay alive. So 4 hour, we can look at this. Let me just get rid of the session breaks. Yeah, we can look at this in a different way. What are we showing at the moment? Well, 4 hour structure's breaking down here, right? We had the higher high into a lower low. We've now had a lower high into a lower low. Yeah. So, well, what do I want to see here? Well, actually, I want to know what's capping the market, right? So what's stopping price move higher? At the moment, it's this very, very skinny bearish gap, right? So because we've swept out the lows here, if I want to see this resurgent, and only from an intraday perspective, if we closed above this, I would look for this area to be respected and then look to trade it into these highs because price will almost certainly be showing a strength here, meaning it's looking for liquidity higher. From a swing perspective, I'm not entering anything here because we're just smashing into resistance, right? And I would be very, very cautious with this as well, especially at the moment. I would want to see equity markets playing along, etc., which is fine. As we move this range down here, right, and again, show it on this one, but we'll also show it from the perspective of our volume profile. Yeah, we can see this nice range in here. Deviation, price gets back in, sells off to the lows, gets back in. What does it do? Back to the highs, highs to the lows, lows to the highs, highs to the mid. Yeah, holds here, fine, comes back in, but look, still fails to get acceptance. Just look at the wicks. Yeah, if you get a strong close above, something I always try and do to confirm if this is a deviation or not. Yeah, any of these, yeah, once we broke out here, yeah, then I want to see price retest this or retest that and come back above it. Yeah, did we do that? No. When we broke out here, yeah, what did price do? Did we get any follow through from this? We did not. All right, no problem. So we stay away from it. Same here, same here, same here, same on all of these, right? So there's no reason for us to not classify these as deviations. Ultimately, what undoes most people is patience, right? People want to see the breakout. So this is why they're so easily trapped here. And then those same people that are trapped here, when the market flushes out, then feel like everything's over and start to short it. And that's when, you'll hear the term smart money or, institutional players or whoever then step in and understand that, there's good liquidity here to send the market the other way. While we're ranging, we just respect the range. We just want to put a set of parameters in place that allow us to trade it. If we're ranging, I'm looking for range plays. If we're sweeping the low of a range, then I'm looking for price to step back in that range and trade it higher, or vice versa if we're trading the highs, right? So for now, for any kind of perspective, I want to be long from further down here, so it gives me breathing room into resistance, or I want to see that breakout above here, okay? That is literally it, right? That's it, sorted, right? We're going to move on to Ethereum, Solana, AXGT. We're going to look at Pepe as well, and Injective. So let me just have a little look at the comments. Lucerino, live here, yeah, climate moderate. It looks lovely, mate. Absolutely lovely. Boss Skills, can you please change the back screen in black instead? No, mate, unfortunately not. Apologies for that, but yeah, it just doesn't really work for me. Just a dad. Upcoming breakout will be swift, it seems. 3 tests and push. We're looking to Euro deal with the USA on tariffs. Yeah, it's not a bad play though, right? And if you're looking at that, looking at those patterns, right, what you've alluded to there, a 3 drive pattern is a very, very important pattern. A lot of classical TA people will be looking for price to do that, the knock on the door 3 times and then ultimately reverse. Inducing longs, flushing them, inducing longs, flushing them, inducing longs again, more people step in and ultimately then really ripping it out from there. JG, Binance market makers are stopping this going higher. It's all in the order books. Yeah, a lot of very interesting order book data actually that you can see at the moment. You align that with liquidity principles and it can be quite strong. Ultimately, we don't mind seeing this consolidation here on Bitcoin because actually we've got it on this one, haven't we? Because I quite like the fact that while Bitcoin's consolidating, it's putting a little bit of breathing room and capital rotation into altcoins. We saw this with Ethereum, beautiful run-ups that we've had in Ethereum lately. But same thing with Ethereum. The reason I've not been long Ethereum, I've been very, very clear about this. These are all available for members and even on Twitter and stuff like that as well. These are the key levels for me, right? When we broke above here, longs up into here, retested this level, longs up into here. But no longs again until we crack this level for me, yeah? Or we come back down to these key levels. If we hold here, we haven't got any yet. We get the low time frame setups, then intraday up into these highs, maybe then building that position into something a little bit more as we hold through resistance. But I can't swing this up into resistance here, right? From down here, I was fine. This line's here as a management mechanism. So good reactions from here and price pushing higher. At the moment, we're seeing a little bit of a retrace. This was our line in the sand, I think, from Monday that we were looking at. We closed above this here. So looking for this order block area or this confirmed area of demand. Buyers stepped in here previously. So we want to see if they're going to step in again. But also this high. Yeah, so really key swing high from over here that sat within a gap. 2 really good liquidity pools that, if met with the right conditions, can be a great shorting opportunity in the market, which we saw on the initial engagement here when price broke down. Found support at this level. Now it's back above it. I'm asking myself the question of, well, if this was the level that was really going to reverse the market, why have we popped back above it? Yeah. So still feeling bullish here on Ethereum, just not really getting the setups at the moment. And obviously the massive caveat at the moment is just what a turbulent day and week of news events that we had. So hoping that we actually get a little bit of pushback here from the news events, that we hold some key levels, and then we can look to obviously get some good buying opportunities moving into that. With ETH, I don't really need to go any more granular than that. But if I was, then again, I would be looking at this, all right, and saying, where do I really want to be active here? It's a little bit messy, this, because look, we got that nice inversion gap here. Price now looks, unless we recover this gap, If we recovered this gap and this was just a long downside wick, then I'm intraday longing into these highs. Simple as that, right? At the moment, we've inverted this bearish gap, so it goes purple, and we've just not respected it at all. So if that's the case, then we don't want data on the charts that's not useful. We're looking for this to hold, but again, I would have expected a better reaction here. Remember, like my terrible analogy about the hot water. This was a decent one. You put your hand in the pan of hot water, you've pulled it away, but actually the water's now become quite tepid, and what you can see is you're quite comfortable to spend your time in here, right? Someone's thrown a gold coin at the bottom of the bucket. Let me do you a terrible picture. I'm going to do it with this. Just here's your bucket, right? It's filled with water to the top, and that water's really, really hot. Actually, it's here, right? This is the water line. So what are you doing? First, you put your hand in. Oh, you have to pull it out. See how quick the reaction is. Yeah, you get that V-shaped move because price reacts here. Buyers stepped in aggressively, pushes it up. But there wasn't follow through. Those buyers then got absorbed by the sellers, and price is now moving down. Now look how much more time price is able to spend at this level, right? So for me, when I look at that, I think, well, chances are price can now push down. If we've got a big gold coin sat down here, well, you couldn't grab it that time. You got pushed out of the hot water, right? And now the water's become more tepid. There's a higher likelihood that you can reach down and get that coin. So always looking at how price reacts at these levels. For example, case in point, this is what we were looking at, by the way, in order to break out, which we did get over here. That's why that green line is there from probably last week, I would imagine, right? Look at this. This reaction here, what happened? Price came into this level and very quickly moved away, right? What kind of shape did we get? We got this nice V shape, right? Aggressive move away, no problem. Just retested the trend line. We got our divergence here, and then price moves higher. Look at the difference to how price engaged the level here to how it engaged the level before the breakthrough. Yeah? Price kind of tentatively tapping that water again. In this case, we've got an upside down bucket. All right. Your hands coming into the bucket here, testing the water. Oh, okay. That's not bad, actually. I'll reach in to get the gold coin. You just notice how price engages these levels. It spends a lot of time here probing it, and then it breaks through, right? Versus stabs into it and comes away. This is another good example here, right? See how price spends a couple of candles here before it moves higher. So as we're looking at this here, this is where we're moving down. Now, what I would do on this one, just because it's very, very clean, is I would look to add a trend line here. Right. And if I look at it with the data that I've got, that looks pretty good. All right. So I don't allow myself, this is all the data I've got. The reason I'm best fitting this is because I want to see the most amount of touch points. And I'm not allowing myself to go through the bodies, though. That's my rule. All right. I like to anchor to a wick, and then I'm happy to put it through and kind of violate the wick here because it meets that one as well. Personally, I think you should either be drawing trend lines like that where you're just linking wicks, right? Or if you're not, then you just don't want to be violating the bodies. So for me, that's pretty good. And we can see the area here is acting quite nicely as well. So a play that we could have in front of us, if we do hold this level, I'd like to see some form of liquidity taken. So ideally this low, which is sat down at 3715. And if we got a move like this, I would be a happy man. Strong recovery from this, pull back to this area, and up we go. Yeah, because look, resistance, resistance, resistance. You can see weaker, weaker, weaker. We now want buyers to step in here and show us some strength. So a V-shaped recovery move showing us buyers are strong here. A retest of this level here or the upper side of this, which would then become an order block if confirmed above. And then we could look for moves, draw back to here or draw back to this level here in order to get long. Again, on an intraday basis here, because we are about to slam back into resistance. So we just want to remember that we need, or I need anyway, a close above this level here to then be pushing up. Don't forget 4,000 is a major psychological level here on Ethereum as well. Just a dad, not a big fan of it. But the chart shows clearly that BlackRock greed is spilling over into EDF, probably thanks to Saylor buying out on the BTC. It's going to be very hard to match Saylor, that's for sure. ETH is more abundant for hedge funds in my case. 10K will come. Yeah, I think the mass adoption for Ethereum is very much underway. I agree. I think people see it as a kind of higher opportunity, risky. higher opportunity beta risk investment, because versus Bitcoin, Saylor obviously controls so much of that supply already. You've got these other Bitcoin treasuries and that coming out now who, in my opinion, are quite late to the game, which just makes it a little bit dangerous. But, flip side of that is we don't know, right? For me, I just like to leave these levels here and think, what, if we establish ourselves above here, where can price really get to? I think price can ultimately really kind of push up a lot higher, right? And we're going to come into these levels over here. So I see this as really clear air above. And as we kind of look back across the chart here, if you smudge it up, you can see how price is just reacting in these ranges. Price spending a lot of time in between these two, fair amount of time between these two, again, trapped up in these higher areas. And we're just acting or reacting within this ranging area here. So again, I don't mind buying this thing cheaper. I don't mind buying it back down at these levels. I would just want to see these hold. If we really start breaking down and spending any time in here, then, for me, the kind of 3K, late 2K areas do come into play here. All right. So I hope that's clear. Anyway, I think, again, quite clear plans. I know it's probably not what most of you want to hear because we're just smashing into resistance, but that's certainly how I'm looking at the markets at the moment. Right, what else we have? So let's take a look at Solana, shall we? And actually, what did we do Sol last time? Did we do that on here? I think we were on the crypto.com charts, weren't we? There we go. So, yeah, this is continuing to hold and playing out pretty well, right? So let me just take you back across the thinking. There wasn't tons here on the weekly. Just feeling pretty decent. Price come up. Last week took out this high, minimally closed above. So, a little bit of absorption here, but would be a key level for some profit taking. So as we stepped into this week, the idea was looking at where price could be drawing to. And I don't know why this, I think I had to redraw this on Monday as well. I don't know why this keeps disappearing. But we have this beautiful weekly bullish gap below us, right? So that's what I'm looking for here. If price is going to reject here, then we want to see this come back down. Ultimately, price is going to find support somewhere. We also have this, which we're going to draw across as well. And we're going to look at that and align these areas, because as we move to the daily now, we'll see this for me was a key pivot point because it was support through here. It was a little bit further back as well, but this is the key thing. When we lost this area, we retested it here, sold off, retested it here, sold off. And again, to hark back to the V-shape rejection or recovery here, we saw the rejection here, and then look how price moves back up, sticks to the level, pops above it. We get back down. We got the perfect retest here. If I just hide this for a moment. Popped above, retest of the area, trading it to the highs. Now, I actually more than happy here when we broke out of this, because it was such a lovely, strong breakout, looking for longs at this level here. Really wanted to see this hold because we were also at the time, excuse me, within a bullish gap. When we closed below it here, again, based on our inversion theory, this is a gap that should have been offering support, as was this level. This level then gets closed below, and we close below this gap, meaning we're looking at this as resistance. So what's our key draw? Well, we're looking at the weekly gap, right? Price often likes to refill, rebalance these gaps. It allows buyers to step back in at a discount and trade price higher. Okay, fine. We can get rid of that now. We were saying early stage breakout of this, yeah? For price to get back above this level, we want to see wick lows here, and what we can see is we broke out, closed straight back below it. It was the perfect confluence to then, continue with that, short-term short bias down to liquidity lower. So if I'm looking for extra confluence, I can see that this low is sat top of this beautiful weekly gap. So this is where I'd be looking for long setups, or as we dive deeper into this gap, or this blue gray box down here. All right, so hopefully that is clear. For anybody operating on lower time frames, how would I see it? Exactly the same. If I wanted a little bit more confirmation on this time frame, for example, then I might look for a couple of things. One, price to close above this, confirming that we have a 4-hour order block. Yeah, I really would like to see this run first, but we could leave, relative equal lows down here. And if this becomes a failure swing, not a swing failure. Failure swing is if price stops there and moves higher and leaves equal lows, relative equal lows. A swing failure is if price swings below the level, recovers it, and then moves higher, and you get that deviation. Okay, just to clarify that in case anybody wasn't aware. The other thing I'd be really interested in here and focusing on the bodies is looking at this breaker. up close candle, drove price lower, close above this, and we move higher. This is something I really love using on crypto. I like using it across all markets, but I find it particularly useful in crypto. For example, what happened here? We swept a higher, so we took liquidity within resistance. It's always important to have that framing. Then where's the last down close candles before price moved higher? Here they are. Again, if we focus on bodies. So moves, I kind of overshot that body low a little bit, but yeah, what did we do? Let's just zoom in on this. See how price retested the breaker here? Yeah, so down close candles, sellers were here, price popped up. This is where buyers overwhelmed the sellers. When price breaks back down to this level here, they're now in drawdown. Price reaches back to here to give them an opportunity to get out a break even or minimal loss and then rejoin ultimately what they now believe to be the master trend, which is leading price lower. So we're just looking for a reverse situation of that. Price to close above here and price to close above the 4-hour order block. Yes, we're moving back into resistance, but we have rebalanced this gap back up to here as well now. So I see this as having clear air as such on an intraday basis up to these highs here. As a minimum, that's what I'd be looking for, because if price is going to continue to show weakness here, I don't see a reason that it should overwhelm the sellers that are quite strongly pushing price down here. If it does, it means it's at least looking for liquidity higher, which would be up here. Jojo, hello, mate. Our wonderful Jojo, who's with us over at the Bird Nest, is at the moment at some conferences for traditional markets as well, looking into some interesting stuff there. So no doubt there'll be some nice alpha or continued alpha being dropped for members in that respect as well. So let's take a look. Actually, let's do injective first. Let's take a look. I don't know if we're doing INJ on here. Yeah, okay, so we didn't get that, obviously. But again, this is why it's so important to set conditions and why I don't take these off the chart until we do. Now we can delete this, right? Because we only delete stuff off these charts live. So it gives us the accountability, or gives me accountability, right? So that's what the plan was. We're saying if price comes in, takes out that, and then we've set this gap, and then if we close above this gap, that's the only point I'm looking for price to be chasing down this liquidity. If not, ultimately, we're just looking for price to move lower, okay? And we can see that we had a very similar scenario here with this skinny little breaker. And we had it even better here. This is like an absolute beautiful setup. This is what I would consider an A++. Why? Because I like to see these inversions to confirm deviations. Within those inversions, I like to see price closing below the breaker. And then if we then leave a bearish gap there as well, oh my, when we retrace to there, everything about you should be screaming to short this, right? And it was ultimately, you know, a really nice short play. And actually not one I was involved in, by the way. Because I wasn't trading injective there, but it was a beautiful setup. We're seeing it on a lot of alts at the moment. Ultimately watching this little consolidation down here as well. But before we get too into it, let's move away. Let's start on the higher time frames. And what are we looking at on the weekly? Look, even on the weekly, you can see all these wicks into here, absorption, showing some kind of support. If you draw it back, you can see that it's relevant here as well. Then when we lose this area, what happens when we retest it? Wicks can't get above it. Buyers are just getting absorbed. Price corrects lower. Ultimately, retest this order block here. And I mean, look at the retest of this, by the way. It's literally to the cent. And this is what we're looking to replay up here. Down close candles, price closing above. It's now closed above this resistance here. And in all honesty, I really like that. We were looking for price to draw down into here and take longs off of this. That was the whole point of it. And now we've rejected at this higher. So we met the initial liquidity target, but I did expect price to show more strength from here. You know, coming back down here, maybe not the greatest thing in the world, but, you know, we could be correcting at the moment. We're still holding structure. So I think that's all right. Just today. Sooner or later, you'll come to the dark side of futures. Real ones, NQ and gold. Too much to tell you. Actually, mate, I don't trade. I very rarely trade crypto. I trade almost entirely the Nasdaq. Funny enough, the NQ contract, ES, occasionally YM, some Forex, and I do trade a bit of gold as well. Probably about 85 to 90% of my trading is on indices. I really like how they move. They're very clean. There's massive amounts of liquidity, which is great because you don't, you can open some pretty big position sizes on there and just be an absolute minnow in a pond full of monsters. But yeah, I love it. It's a lot harder to intraday trade crypto. So I'm looking at this more from a kind of short-term swing perspective. And if it's any scalping, it's normally 5 minutes and up for me. But yeah, I love, these things for me are ultimately where I earn the majority of my money. But in bull markets especially, you can't ignore cryptocurrency. And we have an amazing team that are very, very crypto heavy as well. But actually for my intraday trading and for the live sessions that I run, they're all on NASDAQ. It's very difficult to trade crypto on those very low time frames because of the fees, because of the slippage, because of the liquidity issues, all right? Which is why I always kind of do these shows, as well as the fact that most people are looking at these from a perspective of needing to swing trade these. Most people, I can sit at this desk from 8 a.m. until 9 p.m., which I do most days, Monday to Friday. A lot of people obviously can't do that. July's your vacation, take your money to I look forward to it, mate. I really, really do. Enjoy your vacation month as well. So on a daily scale, nothing really changes here, right? We got that lovely run up into here. Look at the reaction down here. Yeah, and again, inversion gap, bullish gap here, price consolidates. We get that nice breakout and price really, really rips higher. And it gave us several opportunities to get involved. However, we were just slamming into resistance here. So ideally into this, but then above. Then we're looking for longs from here when we retested the order block, which was beautiful. And I really did expect some follow through here. But what up here told me we were getting follow through? Nothing. You always want to take some profit when you get to these key highs, right? There's that level there, but there's also the new high that was up here. Then when price broke down to here, I was expecting more long setups from this gap. Yeah. Then when you see price really digging into this, it's obviously showing a little bit of weakness. I don't like it when we retest these order blocks, these kind of areas of demand, because my expectation is that if buyers are really strong here, then this should be enough to propel above this. That should hold, and then there should be another one made. If you look at any good trending market, ultimately what you're looking for is when price is breaking down. So you get the breakdown here. Obviously, this is the opposite. So we're now looking for the up close candles to reject price lower. Yeah. What do we get? Price comes back down. We don't quite dig into this one up here, but price recovers. But we haven't broken structure here. We've shifted it. So this is what traps people. Then price comes back down. People think this is going to moon. Price comes back down. Ultimately, just squish your chart up and ask yourself, is this bullish or bearish? You want price trading back above this high here. Yeah, so you've got you come in higher, low, higher, higher. You look to long from here. When price breaks back down and shifts that structure, that's when you really need to be cautious. But we're looking for bullish candles to suppress price lower. Yeah. So this was the example for this one. So we're bearish. Yeah, price comes up close candle, close below, rejection, pushes price lower. If we now move that down to the next order block, which we can see here, which are these up close candles, look what happens. Price closes below, comes back, retests it, sells off. We move it down to the next set of up close candles, right? So you get the point. We didn't get the retest on this one, right? But ultimately, they very often work out as good areas of mitigation as well. So if you draw these across, when you get back to those key areas, you're looking for weakness where there was strength and strength where there was weakness. Case in point, this high here that was set by these down close candles here. So what was this? This was our bullish order block. Right, down close candles, price close above, digs into it. As long as this area holds, we look for price to move higher, even if you wanted to include this one in it as well. Right, it's not technically accurate, but there is that down move there before the high is taken. But if you look at this and you draw this across, and even if you did just take it from the upper one, bullish here, price closes below, it becomes an area of mitigation. It now becomes a breaker block, right? And then we look for this area to reject. And what have we got here that we really love? A big bearish gap over it as well, right? So that's what we're looking for. And the reason I wanted to go into that is because when we look at the current price action, we're not seeing that respect, yeah? Price is ultimately, look, even here, close above the down close candles. We don't close below those. It takes us all the way over here before we close above these down close candles or this one here. But again, when we close above these down close candles here with this, I'll draw it in so you can see it. bearish candles, especially ones that take liquidity, and we're reacting at this gap, closed above, now expecting this area to hold, because if this is where the buyers are, then I expect price to move away. What do we get? Price comes up, first retest, price flies away. We don't get a second retest of that, right? So in the same vein, price sets this order block here, first retest, sets a higher high, lovely, violates this, comes back down to this level again. I think it's more likely that price comes to take out this low, right, before it then looks to move higher. And what I really don't want to see, moving back to weekly scale, is I wouldn't want to see the week close back down below this area, because these wicks here show a lot of absorption here from buyers smashing into this level, getting absorbed by sellers, and price ultimately selling off. So as we are just a game of patience at the moment, if I look at it on the 4 hour, want to bring in a bit more granularity, would just love to see it take out this low and then just have a really aggressive move higher. Looking at this area here, for price to sweep out some lows, close above this here, close above this here as well, which would give us our 4 hour order block. And then from there, I think it's got a decent base to move higher. As long as equity markets, and by that I mean the indices, these are looking pretty stable today. All right, again, not the greatest day to judge because it's such turbulent news rocking around, but this is where we are. And I think as long as those factors align, then we just want to be looking longs from key levels, or we want to wait for these recoveries like this breaker block here, and then for price to move higher. And then we can look for longs from this area here. So we'll leave that on the chart for next time. I'm going to get rid of this now just to get the stuff off the chart, but obviously we didn't get those conditions. So what happens if we don't get those conditions? We stay with our bias that price is going to be moving a little bit lower. Right, so that's what else is Axon Dow. That was another one. We keep getting asked this, and I think no, I didn't. I keep meaning to AXGT. Let's have a look. AXGT. Beautiful. What are we looking at this on? No, it wasn't on that, was it? I got asked for the Ethereum pair. That's the one we've been looking at. Here we go. Look at all these squiggles. Glorious, glorious squiggles. Why do they make a lot of sense? Well, quite simply because, go to our weekly here. Yeah, key level of consolidation here, or this was the area I'm really interested in. This high, which when it was broken up, great buying opportunities here, great buying opportunities here. Explain to everyone I was a buyer here and I was a buyer here as well, right? At these levels, for me, great place to accumulate. These only make up part of my high risk investment portfolio, right? But I really like the project. I really like the team. My fundamental team tell me that these guys are really great as well. And also I like the fact that, the area that it's attached with, narrative, is really, really important. So do I have any new information here on the weekly? Not really. We can see that we've been getting the majority of our information here from the daily. Daily conditions were really simple. This is a large area, right? But I tell you why this is relevant, because this big bullish gap here really did a great job of supporting price here. When we closed below it, price tried to flush above it, rejected, retest, rejected here as well, and sold off. So the cleanest play for me on a daily scale is looking for price to close above this area, as we said here, set this high, establish itself above the high, and then I think we really, really move. As it is, I think it looks healthy. I think, look, you will get weekends that you'll see these little pumps and people will just sell, and that's kind of what's happening here at the moment. We're getting those pumps, almost having their resurgent weekends of selling off, or market conditions aren't quite favorable enough for a risk category of asset like this, which is fine. What does it mean? It just means that I get to add more lower down if I want to. That's the worst case scenario here, and this is where risk allocation and management comes in, is worst case scenario here, if we just keep to move lower, then I'm just bringing my average buying price down. All right. If market conditions continue as we assume that they will, if we've ultimately got inflation under control in the United States, if we've got stable GDP, if we're in a rate cutting environment, not a raising environment, if there's the potential for QE, quantitative easing on the horizon, which there is, if there's a large bond buyback in the US happening, which there is, they need to buy back several $1 trillion worth of debt in the form of bonds and treasury notes between now and within 2026. All of these factors are lining up for a lot of bullish catalysts. Yes, we can get a black swan. Yes, there are factors going on in the market at the moment that means that it could turn. But, at the moment, they're not really that prevalent. So that's what we need to factor in. So as it goes, I'm looking with these, risk baskets that I'm adding to my long-term holdings to buy assets like that, like this cheaper. All right. So not really got anything else to say. I think you either take the safe play and you buy it above here. And again, I'm not advising you to do this. It's up to you. And please do your own research. Look into the company, look into the team, look into the community. Ultimately, that's what's going to give you that conviction to invest. So either waiting for price to establish above here, excuse me, and then buying there, or I'm looking for cheaper prices, like down below these lows. All right. Just a dad. Real pleasure. Always a pleasure to have you on here. I will see you on the battlefield, my friend. Colours flying high and tea in hand. So yeah, I think buying opportunities are still nice in here. And what I would say is, when we were talking about this previously, and okay, it looks a little bit nicer here because buying here, people wanted to buy this lower. People wanted a retest of this consolidation down here, which actually, if we look at that on a daily scale, right, and we draw this across as basically the top of the consolidation. How do I know that? Well, they're the black candles. It's not too sad, is it? So we get back down to these levels here, and I'm definitely going to be an interested buyer again. But the point I wanted to make was this. When price came down into these areas before, people bought here, shaken out. People bought here, shaken out. And then look, by the time these moves often don't give you an opportunity to step in. By the time the major players in this are committed to buying this, you're going to get this bit of chop. The idea is to, shake out weak hands, give strong hands the opportunity to buy more. But look, this move here was your real teller. This large volume expansion that left these gaps were great opportunities to buy back in. People that waited for the retest or for these lows to be swept out were ultimately left on the sidelines. And, we saw that again here. What happened? People buying here, all shaken out here, buying here, all shaken out here, pop. Yeah, and all right, this one didn't have the follow through, right? But I'm not being funny. If you were buying this green line, even if you had your stop loss below this one, you still did like 3.5 R to that. You would have been able to mitigate and control the position a lot better. Or as I'm seeing this in terms of just dollar cost averaging into it, just continuing to buy this lower and just bringing my average price down. So that's where I am with Axon Dow, AXGT. Let's take a look at Pepe. Someone asked us for Pepe earlier, didn't they? Was it Shay or someone? But let's have a look. Have we done Pepe on the... Yeah, look at this mess. Right, perfect. So let's have a look. Weekly chart for Pepe. Still kind of being contained by this weekly gap, right? So plan was this. React to the bullish gap. Close above the bearish gap. Turn it into support. Retest it. Trade it higher. Unfortunately, we can see that hasn't quite played out yet. But it may still well do, right? We got the first part of the play right. We saw the rejection here at this gap and at this... Yeah, this low. Why is that low important? Because it was a key liquidity pool that led to buyers stepping back in. Those buyers were ultimately absorbed, flipped offside when it closed below. They flipped to short here, cascade down into the lows. Good buying opportunities. This area formed rejection, as did this level. And that's why, for me, that's a really key level to see price establish itself above. Yeah. So we first want to flip this. We want to get a good close above this. Look for this area to be retested, ideally along with this high, which is at quadruple 0.14412. And we move up from there. Let's look at it on the daily. So these were the conditions for price moving higher after sweeping this low. We did not meet them. Yeah. See these? These just represent, as they do on the candle, showing large candle body closes above, which we didn't get. So what do? We assume price will move lower. This was our target for lower, which was the weekly gap. Now I'm going to get rid of this off the chart so we can clean this up because those conditions did not get met. There's no point just leaving them on there to say, oh, yeah, well, we did this right, we did that wrong. It just ultimately washes through in your P&L at the end of the day. So as we look at this here on the daily, and I wouldn't really want to move this beyond the day, if I'm looking at an area that this should is the wrong term, but I'm definitely going to look at this low. Right, this low down here, price comes in, sets these equal lows, price ran this, closed below it, now it's looking weak. There is a great liquidity pool sat down here in this consolidation, so this is what I'm going to be monitoring, be looking at how price reacts in here. If we really start carving into this, then I think these lows and ultimately these come back into play. Be interesting to see how memes, the kind of more established memes like Pepe and stuff hold up in the next part of this cycle, the next part of this run, should obviously we get it. Safest play here at the moment is looking for price to invert this bearish gap on the daily. Yeah, so again, closing above this and then using this as support. Obviously we do have this in here as well, which is the breaker. So we're going to pop that in as well. Breaker probably not enough just on its own here because of this gap. I think probably safer players to wait for that gap to be closed above as well, and then just use the pullbacks here to long short term into these highs, but could be the base of quite a good pyramiding position if price does run. All right, not afraid to take a nibble with these memes, right? Because again, you just get these big explosive moves that often don't give you an opportunity to get in unless you're FOMOing, and you do not want to be FOMOing in. So a couple of things to finish up on. One, Bitcoin dominance peaking its way back up again here. Good friend of mine, a wonderful trader who I work alongside, the trading tank, was saying exactly this, saying, well, really want to kind of see this area here, and I don't want to bastardize his content because it's absolutely exceptional. But if I was looking at this is where I'd be looking and saying, okay, well, couldn't have clocked that up many more times, could I? Hang on, I'm going to get this right. Excellent. Right. So this is where I'm looking at and saying, okay, key area here. When price got above this, alts just bled out so hard. Came back down to here. This was the key area. Found support again, moving up. Just want to see this area ultimately hold and continue to drive price lower. If we can get that, then, I don't like this term, but, seeing runs on alts or the, alt season is a lot more likely. Ultimately, we just want to see weakness in here and price to drive down. Next thing I'm just going to cover very quickly before we end up is my baby, Estate X. Now, I don't want to be this guy, but part of me does. I fucking said to everybody on here the reasons that I love this project and I love the team and that I just think everything about them is exceptional. And I actually stopped doing the TA on this because I said to people, anywhere below here is a gift. Right now, I don't want to be one of these twats that's just like, oh, I told you to do this and blah, blah. But at the end of the day, I do put myself out there every single week, tell you the projects I'm investing in. I don't bring loads of stuff in. I don't shill anything. I'm not paid to tell you about any of these things, right? I'm an investor in these guys because I believe in the project and because I understand the industry, because I came from a development background. I came from a building background. And I know how difficult it is to invest in property. These guys give you tokenized access to this. You can invest in tiny little bits of estate all over the world, right? With just great plans. Some of the biggest industry experts, these guys have got partnerships going on with, some of the biggest companies in the world. And this space is ripe for disruption, right? So somebody actually messaged, and I'm really sorry that I missed this because I didn't see it until I was reviewing the live show on Monday, to just say, great call on Estate X. And thank you for that. And honestly, I'm not saying this for any clout perspective at all. And again, I never tell you to buy these things. I tell you the reason that I am a buyer of these things. And the reason's really simple for me. I understand the industry. I understand the team. I think the whole lot are absolutely exceptional. And it's just really lovely to see this. Yes, we're down a little bit here. If we come all the way back down to here, I'm just going to buy more of it. That's just full disclosure from me, right? It's been great to see this really start to take off. And I think this is really, really just the start. So, TA and everything aside, the chart looks really, really nice. If I'm looking at this here and I'm saying to myself, all right, well, why were we concerned about this area here as well? This area here was just a key pivot point. Rejection, strong move, offered initial support, closed below, retested, sold off. Well, what does that mean? That means now that strong hands have stepped in down here and smart buyers, in my opinion, not considering myself one of them, thankfully surrounded by much smarter people than I am. But then we saw the expansion. Did this give anyone a chance to get in? Everybody waiting for the pullback. I think pullbacks to this area here, are going to be the acid test here. I think this holds up really well at this level. And if it doesn't, I'm a happy buyer down below. This is a long-term investment for me and one I'm super excited in. And, not that the guys will necessarily even watch this, but if they are watching this, to the team that are there, Bart, Steve, the crew, they're just doing an amazing job. And I've met them all over the world and just see how hard they work, see the people they're meeting, meet the people that are impressed with who they are. What a great team, what a great company, and in my opinion, a really great project that's going to be here for a long time. So do look into it, right? Estate X. You don't just need to look into the token, you need to look in to the company, why they're so relevant, why they've got this huge upside potential in just a multi-trillion-dollar industry that's opening up the access to property investment for everyone. All right. And on that note, 13:01, almost timed it perfectly. 1 minute over. Well, I let myself fly on that one this week. But thank you all for joining this week. It really has been a pleasure to be with you all again. Do be careful. Watch out for the news this week. Obviously, especially today with FOMC, just make sure that if you've got positions running, you've got a little eye on them. Always be managing your risk, all right, and always be managing your positions. And just wishing you all a fantastic week ahead. Great close of week, amazing weekend. And I look forward to seeing you all back out here on Monday or with us over at the Nest. And on that, if you'd like to find out anything more about what we do over at the Bird Nest, you can find all the information down in the description. Don't hesitate to reach out to me on Twitter. You can find me at BC_Richfield. I post a lot of content on there. And don't forget to go and check out our website as well, the Birb, BIRB, Nest.com. You can find tons of free resources and goodies over there. And one last thing that I want to say as well, guys, do not forget to get yourself involved in the McLaren giveaway. OKX are running a McLaren giveaway whereby if you just sign up for the exchange, trade a little bit of crypto, and it can be between you and I minuscule amounts, they're going to send you a free limited edition team cap. Right, I'm going to play the advert on this at the end, and you're going to see how freaking cool this cap is. I'm in. I'm not even joking. I trade with the guys anyway, but I'm in. I'm not going to lie to you. I've set up a different account, and I want that damn cap. And the best thing of all is you're going into a prize draw to get VIP, full access, dream scenario tickets to the Dutch Grand Prix. And I'm just obsessed with the idea of somebody from this show winning it, so that somebody can come on here and be like, fuck, BC, everyone, look at this amazing time I had. And at the worst case scenario, you're going to end up with a really cool cap. And I tell you this right now from experience, OKX, and especially McLaren as well, make some absolutely banging merchandise. All right. So take a look at that. Take a little look at the advert here. You just need to go on to the European OKX site. If you're struggling with it at all, just ping me in Twitter or something like that, and I'll get all the details out to you over there. All right, legends, Shay, 2P, Just the Dad, everybody else that joined us today. Great to have you here. Have a fantastic day and a fantastic week ahead. And I look forward to seeing you all around the Nest.